Welcome back. You're watching Taking Stock. It was a good week for the bulls considering the kind of global cues that we had. Monday morning, the market also will react to Reliance's numbers. We were talking to Sanjeev, Prasad. Rajat Rajgarhia now joins in from Motilal, Oswal. Rajat, hi. Good to have you on the show. The first week of earnings season hasn't been bad. Let's put it that way. Do you think that should give enough confidence to the bulls that this market rally that we have seen can extend? Or do you think largely will be driven by what happens with global cues?
Well, I think we are right now so early into the earnings season that from the 6-7 results that have come, you really can't draw much conclusion. But at least what happened that after the December quarter numbers, the expectations themselves had got toned down so much that I think this may be a quarter where you may see a number of beats being higher than the number of misses. And somewhere the markets also, sniffed that when it kind of bottomed at about 7,000 in, towards end of Feb, and from there the markets have recovered well. So first 4 months of this calendar year, we are flat, but the earnings changes that had to happen after the December quarter has happened, and we should see things getting better from here as far as the corporate numbers are concerned.
Okay, that's good to hear. Rajat, hi, welcome to the show. The stock of the week, or even of the month if you'd want to look at it, is Tata Steel. It's gained about 7% in the week gone by and almost 11% in this month. Do you believe that the cycle in metals is turning for the better, and would you advise putting any money into the metal space?
Well, I can tell you that no one will be able to predict, given the big run-ups that we have seen in the metal prices, on how long they can sustain. When oil was at 30, the number of reports that we read about oil going down to 20 was not funny, and today we are at 45. I think you have to right now just ride these trends. I have no view that whether this cycle in the metals is going to sustain or not, but I just think that the rally from the bottom in many of these underlying commodities has been very sharp, and stocks are just reciprocating that. I would still look at many of these stocks at more as trading bets right now, because nothing has changed in the global economy in the last 1.5 months for prices to move up so much, right? Maybe the prices did a lot on the way down, so they are just getting normalized, right? I think the excess was done on the down, and just restoring of that access to some normal level has brought a good rally into these names. So trade till the time you are seeing this rally sustaining in the underlying commodities. To make investment case right now, there is no hard data to support that.
Okay, Rajat, the other stock of the week was Maruti, and what a turn it's been for yen from 107 thereabouts back to 111 now. How do you play a stock like Maruti? Would you maintain your positive stance, or do you think there's a fair bit of rally now in place, and maybe going forward we could see a bit of profit booking?
Well, Maruti again is a story of multiple moving parts, right? And I don't think that we should try to err too much by making the cyclicality component of the earnings to look like a structural or a consumer earnings, because from 80 to 120 when yen moved, you saw a massive boost to the margins coming in. But from here onwards, I think the story in Maruti is going to be more about a decent volume growth and how the operating metrics change. I think margins have definitely been at their peak, largely boosted by the yen. And as I mentioned about steel, I think one can hold the same view about yen also, because 10-15% move into yen in a matter of 1-2 months looks quite crazy, right? And we were just at 107 early this week. We are 111 now. We can't even predict next week for yen. Forget about predicting for the next 6 months or a year, right? So I think earnings and multiples both are getting adjusted for Maruti for this volatility.
Okay, so let's try and discuss something that we can not predict, but at least something we can see. Some green shoots are visible in spaces like cement, Rajat. We heard from the Ultratech CFO that there's double-digit growth seen in cement demand. Do you think that has already played out, or is there a bigger, perhaps a multi-year upcycle in cement that we're witnessing?
Well, Sonia, you may find it funny, but I don't want to sound negative on the sectors or the stocks that I am commenting upon. But I think there is some cyclicality that is associated with most of the sectors that we are talking about. Even for cement, whenever you have periods of March and April, you always see optimism getting built in, because these are the best months of construction activity picking up. Prices typically move up. But yes, even within this cyclical space, you are seeing one or two structural things moving in favor of the sector, where you can at least see the supply getting very, very constrained over the next 3 years, right? And demand is something that at least I have been surprised at why last 1 year, despite so much of focus on roads and housing, demand has not picked up. So I'm actually pretty impressed by the way demand has picked up in the last 2-3 months. And if this monsoons turned out to be normal, then post-monsoon you can see construction activity picking up even further. So yes, I would think that cement is one space where the next 3 years should be a lot better than the last 3 years that went by, and is a sector that investors should be overweight on.
Okay, finally, Rajat, did you have time to look at Reliance's earnings, and what's the call on the stock now, Monday morning?
Well, the numbers were expected to be good, and prima facie the headline numbers look like being better than what the street was building in. But I think there are two things again to look in Reliance. First is their guidances on the commissioning schedule of their greenfield projects, which they are going to discuss or update us on, based on which you will see the earnings trend changes for FY 17-18. And second, how does one view the entire telecom venture, given that we are so close to this business now finally being launched commercially? Stock should take one positive tick up just based on the number. In an environment when corporate earnings are growing negative, this is one company which is growing in double digits, so that will get respected. But I think beyond that Monday morning tick, the focus will shift on the commissioning of the big projects that they have invested in.
All right, on that note, we will let you go. Thanks, Rajat Rajgarhia, for joining us. And with that, it is a wrap on this edition of Taking Stock. Of course, we'll see you again on Monday morning. Goodbye.